Good morning, traders from whichever side of the country, world you're watching me from. Welcome to today's morning market call. My name is Ian Joseph, market analyst at HFM. Now, a quick disclaimer before we do begin. The information herein is only meant for educational and informative purposes only. None of it should be construed as investment advice. Trading the financial markets do carry a degree of risk, but do not worry. I'm here to help you look at the markets the right way. We have had a few interesting upcomings, and I want to share it with you. How can you find opportunities in this moment in time? This is the perfect time to start trading. And how can you go about it? What are you going to do? Which are the steps that you're going to take? And I'm here to help you comb the markets in the right way. Once again, my name is Ian Joseph. Welcome to the morning market call. If you have any inquiries, we have just started a segment whereby you can input any question that you want in the chat section, and I'll be glad to be of help. Moving over to where we usually begin our days, where we do have the Shield 500 account. If you do open an account today, within the first 10 days after opening your account, you are eligible for the Shield 500 account, whereby you can deposit between $100 and $500, and whatever losses you go through within the first 25 days, we are going to cover it up to $500. Basically, you are going to trade real market conditions, live market conditions, risk-free with the Shield 500. Not only that, we also do have a few promotions currently ongoing. If you go over to our HF under the promotion segment, we do have Battle of the Elite round number 2, whereby you have an opportunity to become Kenya's Don Wabiz, have an opportunity to claim 650,000 Kenyan shillings for number 1. Number 2 is going to walk home with 260 Gs. Number 3 is going to walk home with 130,000 Kenyan shillings. We are going to have 10 winners in the lucky draw, walking home with each $200, and we have many more up in store for you only at HFM. Now, going over to the economic calendar, whereby yesterday we did have the Fed Reserve lowering interest rates, and this was quite interesting. We were looking forward to this moment in time whereby what is the central bank, what is the Fed Reserve going to do? Now, remember, one of the mandates of a central bank is to offer forward guidance, whereby they are going to tell us where they feel the economy is generally headed to. And I want us to look at a few articles and digest the data. Where could gold potentially move to? Where could GBP USD, USD JPY, whichever asset that you want me to look into, kindly put it in the chat section. I'll be glad to be of help. But looking at it on the economic calendar, if I can go to yesterday, and this was exactly at 9 p.m. This was Nairobi time, whereby we had the Fed Reserve lowering interest rates by 25 basis points. It was initially at 4.25%, currently is at 4.0%. But the most important thing that we wanted to look at is the FOMC press conference, whereby we wanted to hear from Jerome Powell, where do you see the economy is headed to in the United States of America? And I want us to digest that data, whereby, yes, they did lower interest rates, but we were anticipating 2 interest rate cuts this year. But he did suggest this move may be the last of 2025. And why? This was yesterday when he was releasing the speech, and Federal Governor Miran, Kansas City Fed President, wasn't there. The policy decision was made in the absence of key government data, as the Fed's balance sheet drawdown did hold. Now, Powell did mention there are strongly differing views within the Fed Reserve about a December rate cut. And I want us to look at why are they looking at this trajectory? Now, we are looking at the government shutdown still ongoing currently in the United States of America. Now, we haven't received NFP data for this month. We haven't received key data that the Fed Reserve, that the central bank usually look at, that helps them gauge where the economy is headed to, especially in terms of employment. Now, there is a policy divide within the U.S. central bank and a lack of federal government data, which puts another interest rate cut out of reach this year. As Federal Chair Jerome Powell did mention yesterday, he acknowledged the threats that officials see to the job market, but also the risky nature of making further rates moves without a fuller picture of the current economy. Now, they did lower their interest rates by a 0.25 percentage point, which is 0.25%, as expected. as a way to temper any further weakening of the job market. But the central bank's new policy statement included several references to the lack of official data during a federal government shutdown, and Powell told reporters later that policymakers are likely to become more cautious if it deprives them of further job and inflationary numbers. Now, yesterday, while we were doing our morning market call, we were looking at a potential. Now, we only have one meeting remaining, which is going to be 10th of December this year, where the Fed Reserve are going to meet up once again and then discuss of monetary policy. Yesterday, these numbers was around 90%. We have actually seen it go down by more than 20% as a result of yesterday's meeting, whereby right now there's only a 70.4% chance interest rates will be taken further down to 375 to 400 basis points. Looking at the current target is at 400 basis points. We were looking at a further 25 basis points cut by 10th of December, which is going to be in the next 41 days, 10 hours and counting. But the statistics are actually improving on the holding of interest rates, whereby currently at the moment there's a 29.6% chance that interest rates are going to be held between the 400 basis points region. Now, we want to look at this information. Yes, the government has shut down. We don't have key data that we are looking at currently at the moment. And this is quite interesting because if we don't have this data, if the Fed Reserve don't have this data, he did mention we cannot lower interest rates. Why? Because if you asked me, it could affect the December meeting. I'm not saying it's going to, but yeah, you could imagine that. You know what you do if you're driving in the fog? You do slow down. That was the remarks from Federal Chair Jerome Powell. TH3 Chef wants us to look at gold. He also wants us to look at Euro USD. No. Quite interesting. His comments did show the developing dilemma for the Fed as a budget dispute between the Trump administration and Democrats in Congress extends into the second month. We are just a few days shy from the longest government shutdown the United States has ever been into, and there are strongly differing views among his Fed colleagues about the appropriate path for monetary policy moving forward, with a growing chorus now feeling maybe this is where we should wait at least a cycle. And we want to look at this information, and I'll look at it later on, whereby I want us to look at the next 11. Going back to the economic calendar, whereby today earlier on in the morning, if I can just switch over the calendar today, whereby we just had a few developing stories that I want to share with you, whereby, okay, in just a moment, I get these in order. Let me apply that. Okay, we had Trump and President Xi meeting today at exactly 4 a.m. in China. Quite interesting. Looking at it from this perspective, what does this mean? We want to look at a few pointers. What did they talk about? What did President Donald J. Trump and President Xi talk about? Now, this is the picture that they did take today, the big man, Mr. Donald J. Trump and President Xi, whereby they did talk of 5 key points, whereby the first one, they both agreed to trim tariffs on Chinese goods to 47%. Now, China agrees to a 1-year rare earth export deal, and he did mention US to cut tariffs on China goods over fentanyl flow to 10%. Now, Trump said Taiwan tensions did not cap up in talks. Now we are looking at developing tensions between the two countries, China and Taiwan, as China shares did pull back from a decade high on Thursday. But I want us to look at how this information is going to affect us. And the 5 pointers are, the first one was, he did mention that this was one of the best meetings they've ever had, rating it at a 12 out of 10, said Mr. Donald J. Trump. As he did mention, it was amazing with an outstanding group of decisions that were made. Now, we've come to a conclusion on many important points, and I want us to talk about the 5 main points that they did talk about. Now, the president told reporters he will go to China in April and that Xi will come to the United States, whether it's in Florida, Palm Beach, or Washington, D.C. Now, we were looking at rare earth metals, and this was quite interesting, whereby the Chinese region accounts for more than 90% of final rare earth metals. Let's say, for example, if Tesla wants to produce electric vehicles, most of the magnets does come from China. Most of the exotic rare earth metals that constitute of machinery, let's say, for example, the automobile industry does come from China. And we did see, yes, they did have tariffs being impacted, but they did announce a shocking announcement that it was banning exports if there was any chance of the products having dual use for foreign militaries or some semiconductor sectors. And this was something that Trump was really worried about, especially the EDA chips that work potentially could be used for military purposes. But Trump said they are going to keep this flowing. He expected the one-year deal to be extended. Now, all of the rare earth metals has been settled. The roadblock is gone now. There's no roadblock at all on rare earth metals, mentioned Mr. Donald J. Trump. According for the tariffs region, Trump did mention that they are going to work very hard to stop the flow of precursor chemicals that the US said are being used to make fentanyl. The US had put a 20% tariffs on Chinese products specifically to pressure Beijing over fentanyl. Now, today, Trump says he has reduced it to 10%, lowering the overall tariff burden from 57 to 47%, which is quite good. Now, this is important whereby, there were chips that were supposed to be offloaded or imported to China from the United States of America. And this was something that was on the topics. This is something that, the United States defense felt that, okay, some of these chips once again could be used for military purposes, and then they did enact roadblocks to prevent China from importing those chips from the United States of America. But US was more of an arbitrator or referee between them when asked if he was going to allow NVIDIA's new Blackwell AI chip to be sold to China. Trump did mention we are not talking about Blackwell, but a lot of chips, a lot of these chips, and that's good for us. Speaking about Ukraine and Taiwan, it did not come up. Trump said that the US and China are going to work together or need to stop people being killed. However, he also did mention the two sides are locked in fighting, and sometimes you've got to let them fight, I guess. That's crazy, did mention Mr. Donald J. Trump. And we have been seeing the markets move aggressively as a result of this data, whereby also Bank of Japan was not left behind. We did see them hold on interest rates. This was the picture taken today, whereby looking at this article that was released at that particular moment in time, the policy board of the Bank of Japan decided by a 7-2 majority vote to set the following guideline for money market operations for the intermittent period. Now, the bank will encourage the uncollateralized overnight call rate to remain at 0.5%. Now, we are looking at potential Bank of Japan increasing rates in the near future. How could this affect prices? We are now going to switch over to the charts. This is whereby we traders want to keep a keen eye. How do you piece in this information to technical analysis? Yes, we know about all that's happening currently at the moment, but yes, it's still theoretical up to this point in time. How are you going to find opportunities as a result? And I want us to start with the precious metal, gold. Yesterday, we did see gold move quite aggressively to the downside, whereby during Asian session, we did see prices rally to the upper side. We did get a 3-candlestick chart pattern, whereby we had a bullish candle at doji. Then we had signs of sellers coming into the market. During New York Open, prices started moving to the downside. Before the release of the Fed Reserve, we saw prices consolidate for almost 2 hours. But when the meeting did start, and if I can go to the 5-minute time frame, highlight what did happen, we had a massive whipsaw at exactly this point in time. This was exactly 9 p.m. 8 p.m. sorry. So the server on the broker is going to be 1 hour behind. If you look at it on the market watch here, currently at the moment it is 9:18. My local time is 10:18. So the information that you're going to see here, based on the servers, is going to be 1 hour behind from my local time, which is something very important for you to also watch out for. Now, yesterday, whereby at exactly 9 p.m. we did see the market whipsaw, and then 30 minutes later, which was exactly this candlestick, we did see Jerome Powell, the Fed chair, of the Federal Reserve, Mr. Jerome Powell, when he started speaking. And why did the markets move down? Yes, he did mention there is a potential we might not see interest rate cuts in December. Now, if the Fed Reserve are going to hold interest rates where they are currently at the moment, this means that, the currency is expected to strengthen. And as a result, we did see gold lose against the dollar. Ever since that point to the closing price, we did see prices move almost 500 pips to the downside. Quite interesting looking at it from this perspective. This was the result of gold. Now, today in the morning, markets did open. If I can zoom out on the charts, we did see the markets open, move to the upper side, came back down, retested on the opening price of the low of the candlestick that was made on the daily time frame. Prices came back up to retest this region of resistance that we were looking at yesterday. Quite interesting, whereby we had formed support. Now the support had been broken. Could this now act more of a region of resistance for a further continuation to the downside? I would want to consider more selling opportunities if at all prices do break this trend line to the upper side, whereby we are seeing now prices form a channel. If we do close well below the trend line, I would consider potentially looking at selling prices for prices to continue moving back down to 39.15 region, which is almost 1.35% away, almost 500 pips, quite a decent amount of range. But on the other side, whenever we are looking at the charts, we have to look at both sides of the coin. Remember, for us traders, we do react to prices. If at all prices do break above 39.81, I would consider looking at more buying opportunities, potentially prices coming back to the highs that was formed yesterday. Also, this is almost 500 pips away. So gold, we are looking at almost 500 pips either to the upper side or to the lower side if at all prices does react the way we would want it to do. Now looking at silver, silver has been consolidating ever since the speech yesterday, whereby we would want to look at how the markets are going to react if we do break structure. Now looking at the most recent region of support, whereby currently at the moment we are looking at $47.2 an ounce. If we do close below this region, once again, I would consider looking at more short opportunities, potentially for prices to move back down to the $45 an ounce region, which is a psychological level whenever I'm looking at this metal. This is gold's younger brother, and I would also want to look at how prices are going to react. If at all we do break the highs that was formed during Asian session, I would consider looking at more net long opportunities. But if the Fed Reserve are going to hold on to interest rates, which they are going to do currently at the moment, I do anticipate gold to be weaker, as investors would want to move their money into more bearing assets. Let's say, for example, the 10-year treasuries, whereby yesterday it did tank to the downside a bit, but currently at the moment, if you look at it from a weekly perspective, ever since the year did begin to where we are currently at the moment, and this is one of the main reasons why we are seeing a strength in the dollar, whereby the 10-year yields currently at the moment are offering at least 5% return year to date, which is quite interesting. This is quite good looking at it from a financial point of view. Now, if I was to switch gears over to the equities, the S&P 500 once again firing on all cylinders. We are seeing equities move to the upper side, and earnings have actually been coming out much better than anticipated. Now, if you want to trade stocks, you can trade stocks on the HFM platform, and we also do have an earnings calendar whereby you have the opportunity to look at what stocks currently at the moment are going to release their earnings. If you go over to our HF and then under the tools and education segment, we do have the earnings calendar, whereby today we do anticipate earnings from eBay, Credit, Douche, Lufthansa. We are going to have earnings from Total coming before market open. Volkswagen is also going to release their earnings, Altria, and these are companies that constitute the S&P 500. We are seeing these companies actually post more profits. Apple is also going to release their earnings today. Quite something to watch out for, whereby after market close, we do anticipate their earnings per share to come out at 7.36, which is quite high compared to the previous number last quarter, This is the last year with the same quarter earnings per share, whereby it was at 6.08. If the data does come out higher than 7.36, it means the S&P 500 could be poised to move further to the upper side. Amazon is also going to release their earnings today. First Solar, Illumina, Coinbase is going to conclude the earnings today after market close. Quite interesting. All of these available on the HF platform. Now, looking at the S&P 500 once again, ever since the markets did open, we have been seeing prices move to the upper side. Quite interesting. And this gap that we did see to the upper side ever since Friday's closing price to where we are currently at the moment, prices has moved almost 1.48%. And this is a pattern that we have seen happen most of the times on the S&P 500, whereby yesterday during the speech, we had massive momentum to the downside, but the markets are currently correcting. If we do break the highs above 6,929 region, I would consider looking at more net long opportunities on the S&P 500. Looking at this region, we have a second touch on the trend line. If we do have this third touch, markets closing well above the trend line, I would consider looking at more net long opportunities. Currently, at the moment, prices have retraced back close to the opening price of Monday, which could be a breakout and retest for a further continuation to the upper side. But at the same time, if you do get candlesticks closing well below 6,854.97, I would consider looking at net short opportunities. Now, the S&P 500 and the Nasdaq, which is the US 500, are positively correlated, meaning if one does move to the upper side, the other usually does follow. We are seeing prices in between this range, yesterday's low and today's Asian high, and I want to consider how the markets are going to close well above this region, and also how the markets are going to close, if at all the markets do come back below 25,930, whereby if we do break this region, I would consider looking at short opportunities, potentially prices coming back down to the opening gap of the weekly candle. Now, an important thing to note is that today is 30th, tomorrow is going to be 31st, meaning the monthly candle has only 1 day remaining. Apart from today, if you exclude today, we only have tomorrow as the final trading day of the monthly candle, which as a trader, you need to be very careful, because we might anticipate either the markets rushing to the upper side or to the lower side for them to close the markets. Then come Monday, we are going to open a new calendar month. Usually closing prices are very important for us as traders, because it shows us how the markets have moved and where institutions wanted it to move by the end of the month. Finalizing on the US 30, the US 30 has been really choppy of late ever since the markets did open, but it is currently trading well above the opening price of Monday. We want to see how the markets are going to close today and tomorrow for the monthly candle. This is going to be very decisive on how we are going to move on to the final 2 months of 2025. Seasonality speaking, stocks tend to do better towards the end of the year. And this is what we are seeing currently at the moment with the S&P 500. This is what we are seeing on the Nasdaq. This is also what we are seeing on the Dow Jones Industrial Average, whereby if you look at it on a higher perspective, once again, firing on all cylinders. Ever since mid-March, we have been seeing the markets rally to the upper side. And this has been one of the best years on the Dow Jones Industrial Average, whereby it has made almost 31.5% of its total value in less than 148 trading days. Quite interesting looking at it from that perspective. We had an inquiry from T3 about Euro USD, whereby looking at it on a daily perspective, we are somehow consolidating. But if you go to the H4 time frame or the 1 hour time frame, after yesterday's speech, we did see the markets rally to the downside quite aggressively. It failed to break the highs that was formed on Tuesday, and I want to look at this region here of support that has just been formed. Quite interesting, whereby prices are having difficulty breaking below 1.15776. Now the euro, we do anticipate them to release their interest rates today, whereby if I open back my economic calendar, the European Central Bank is anticipated to release their interest rates. It's called the main refinancing operations rate, whereby here it is at exactly 4:15, whereby Currently, at the moment, it's at 2.15%. We do anticipate also a 2.15%. Now, if it does come low, we do anticipate the euro to weaken against the dollar, hence prices moving to the downside. But currently, at the moment, if they are going to hold interest rates, it means the euro potentially could be a much more attractive asset compared to the United States dollar. But at the same time, we also do anticipate the Fed Reserve to hold on to interest rates. As a trader, I would want to look at oncoming data. What is going to be released later on in the day? If we do break above 1.16374, I would consider looking at more net long opportunities on euro against the dollar. But on the other hand, if we do get prices closing below the support region, which is at 1.15776, it means the region of support could be broken and could now act as a potential breakout and retest, potentially 1.15776 could act as a region of resistance in the near future. If at all they do decide to lower interest rates today, and we want to listen to President Christine Lagarde, what does she have to say? What does she have to say about the future economic outlook? And this is one of the things that we as traders want to focus on, the tone of the central bank. The biggest forex participants are the central banks. Basically, these are the people who own the printing machines to those papers. If they say the economy is headed in the wrong direction, it means the economy, it is headed in the wrong direction. But on the other hand, if they do say, okay, we are seeing good numbers in terms of employment, inflation, and so on and so forth, then you do anticipate the currency to strengthen in the long term. Now, this is going to give you a bias of where you are right now and where you need to be. Now, there is a skill that takes a bit of time, and that's why I'm always here at exactly 10 a.m. in the morning to help you look at this information, to help you digest the data. How can you apply this information to your trading, and how can you find probabilities in the markets as a result? I'm going to conclude it at that. I can't see any question unless we have an inquiry from East Africa, whereby tomorrow we do have something that we are going to release for you traders. Remember, we gave out a Mercedes-Benz last month, a brand new Mercedes-Benz, zero mileage. Tomorrow we are going to give out something even bigger, even better. Tune in. Only one way to find out. We do this because of you, the traders. My name is Ian Joseph. Take care of yourselves. I will see you in the next market call, which is going to be tomorrow at a similar time. Peace.